Good evening, my people. Welcome to yet another session of our training on financial literacy. You remember that as of yesterday, we discussed about lesson 3, which is mind your own business. I will still want to emphasize this. I do not take this for lightly. Whether you're already employed, or you're unemployed, or you are a student, mind your own business. So basically, for today, we are going to move into lesson 4. And our 4th lesson is about the history of taxes and the power of corporations. You remembered at the end of our lesson yesterday, I said that after you've learned how to mind your own business, I will teach you the next biggest secret of the rich, which revolves around taxes and the power of corporations. So basically, the rich played the game smart. Understand what I'm saying here. I said the rich played the game smart. I didn't say they played it illegally. Unlike how the society has made us to believe that rich people are wicked, rich people are evil. They only played the game smart, and they did it through corporations, which is the biggest secret of the rich. So in order to have a good grasp or understanding of how taxes and corporations make people rich, it will be good for us to go down memory lane to understand the history of taxes, how taxes came into being, and how corporations started operating. So basically, historically, the passage of taxes was only possible because the masses believed in the Robin Hood theory of economics. That is, take from the rich and give it to everyone else. Thus, the rich were taxed and given to the government with the belief that it will be used for the masses. The problem was that the government's appetite or desire or greed for money was so great that taxes soon needed to be levied on the middle class. And from there, it kept trickling down till it reached the masses. The rich outsmarted the intellectuals through corporations. They invested through corporations so that even if the corporation fails, their risks will be limited only to the money they invested in that corporation. So understand, this is just basically a summary of what taxes and corporations means to a rich man. You know, historically, I told you that initially we have just few wealthy men in the society. And then the poor masses, the same poor masses that you see today, they were the ones who initiated the idea, this Robin Hood theory of economics. Robin Hood is not a savior. Robin Hood is an armed robber. In fact, he is the person who put most of these poor people into what they are doing today, into the suffering they are going through today. Because the idea that the poor masses had as of that time is that they should take from the rich and then give it to everyone else. And you can remember how I've explained to you how the rich make their own money. They don't steal from anybody. They don't kill. They just use their time wisely and have that concept of investment because of that financial literacy. That is why they have the extent of wealth that they have today. So is it in any way fair that after I have invested my time, invested my money to build my own wealth, then people who are lazy will just come around and say the government should collect money from me and distribute it to them? And that is how it will keep on going on. Every time the rich should be taxed and given to the poor. But, you know, the rich didn't say no, because once a law is made, the rich follows the law. They would not object to it to say, no, they are not going to pay that tax, or they are not going to give. But what they did was to simply react. They simply react rather than giving in. So they started giving out the tax. The tax were collected by the government and then given down to the masses through jobs and other opportunities. But subsequently, the government felt, this is a very good way of getting money to use it for what we desire. So when the pressure came in, it is no longer the rich people now. The issue of tax was then also transferred down to the middle class. Initially, it was just the rich people. Now the middle class started paying taxes. And before you know, the government's appetite for money kept on increasing, that it now went back to the initial people, the poor masses, who initiated that idea of taking from the rich and giving to everyone else. You can see how the whole thing now backfired on the same poor people. And then the rich now outsmarted the intellectuals through the use of corporations. Corporation is just a company. Because once you establish a company, it is considered as a distinct legal personality from you. So if the company is worth, let's say if the company is worth 2 million naira, the company is considered as an artificial person. It can sue and be sued in its own name. It can acquire properties in its own name. It can sell properties in its own name. It can enter into contracts in its own name. Although you are the owner of the company, but the company is considered as a different person. So in a situation whereby your company encountered a loss that is worth 3 million naira, and the value of that company is 2 million naira, what the law says is that the person who is owing that company that 3 million naira can only be entitled to collect 2 million naira after liquidating the company. For that remaining 1 million naira, it has disappeared. Because you cannot go after another company owned by that rich man to say you collect the remaining 1 million naira. So can you see how smart the rich played the game? So that they limit the extent of liability. So a rich man may have like 4 different companies. So in a situation where this company gets into trouble, his risk is only limited to the money he has invested in that company. Once that company cannot raise the amount of money required to settle that liability, then so it becomes for that creditor. The creditor cannot go after the other 3 companies that belong to that rich man in order to complete payment of that liability. So this is just basically the summary of how tax and corporations are used by rich people. Let me briefly show you a diagram that shows how corporate structures sit outside your personal income statement and balance sheet. Because you think as if, it is not something that serious, but when you get to understand how the game is played, you will discover that a lot of things have been happening which you aren't aware of. A lot of things have been happening which you aren't aware of. So if you are not looking at your screen, kindly look at your screen now so that you can see what I am trying to explain. So this is the corporation income statement. On this side, that's on the left side, you see the corporation income statement. On the right side, you see your personal income statement. And then the downside, balance sheet, that's your own balance sheet. So this is your personal income statement, and this is your balance sheet. And then at the left-hand side is the corporation income statement. So for instance, now that I'm working with a company, let me just briefly use myself to explain this thing to you so that you understand very well. You can see my personal income statement. When it starts from my own asset, my own intellectual ability, that God-given life, that God-given genius, that God-given talent that is inside me, that is what I start donating to the company. Because I am working with the company, I am giving the company my intellectual asset. Because as for now, this is only what I have, my intellectual asset. So it comes out from this my asset column, because the only thing inside my asset column is my intellectual asset. So when it comes out, it goes like this down to up to the income column of the company or the corporation. When it goes into the income statement of the corporation as income, because the company would generate money as a result of the intellectual asset I used for the company. So once they generate the income, the company would first of all settle its own expenses. If the company wants to renovate any structure, or the company wants to pay any debt, or the company wants to buy properties for itself, all these things falls under its expenses. The company would make sure that it has settled all its expenses, and then the remaining balance will now come to you in form of your own income, that is salary. And let me tell you one thing about tax here. Once the company would make all its expenses, okay, let's say for instance, the income generated by the company for that month is 50 million naira. And the company has an expenses of, let's say, 40 million naira. The expenses, including your salary and the rest of, including your salary, it all encompasses under the expenses of the company. The company would remove that 40 million naira first, and then it is the remaining 10 million naira that the government will now collect tax on it. So you can see the rich man is not taxed 100% on the income he has received. But as for you who is working, once your salary comes in, before it comes in, the company would have deducted 100% ratio from your income as tax and remitted to the government before the remaining balance comes into your hand. But for the rich man, he does his expenses. It is the remaining balance that is taxed. But for the poor man, he is taxed before he can even get the money to use for his own expenses. So like I was explaining, from the income statement of the corporation, it goes down to the expense column, which is also goes to you as salary. That's your own income. And the ironical thing there is that since me, I do not produce anything. I only rely all my clothes, my utensils, everything that I use, my phone, are produced by companies. So what happens is that at the end of the day, if I collect this salary, I buy phone, I buy clothes, I buy car, I buy this, all the expenses still goes back to the corporation. So you can see from my expense column, because the money I use to buy these things goes to another company who is producing it. So you can see it's just a circulation. Even the money that you will spend after getting it as salary from your company, the money will still go back to another company in form of your own expenses. So this is how the whole cycle continues. From your intellectual asset, it goes to the income column of the corporation, down to its expense column, before it goes to your income column, and then the money still goes out of your expense column and enters into the expense column of the corporation. So this is what I can simply refer to as an act of circumlocution. So that is just the brief thing I want you to understand about the income statement of a corporation. So it is the knowledge of legal corporate structure that really leaves the rich a vast advantage over the poor and middle class. That is how taxes were eventually levied on the middle class. The rich outsmarted the intellectuals solely because they understood the power of money, a subject not taught in schools, not taught in churches, not taught in mosques. How did the rich outsmart the intellectuals? Once they take from the rich, tax was passed, cash started flowing into government coffers. Initially, people were happy. They are collecting from these wicked people and giving us. They are collecting money from the rich people and they are giving us in form of. So initially, people were happy. money was handed out to government workers and the rich. It went to government workers in form of jobs and pension. That is the money, the tax collected from the rich. It went to government workers in form of what? Jobs and pensions. And it went to the rich via their factories receiving government contracts. So you can see, after collecting the money from the rich to use to create jobs, will pay pensions for government workers, will execute contracts within the society. The contracts are still now executed by companies or factories owned by the rich people. So it's just like the rich people, they are just like Indian givers. They give you the money in one hand and then collect it back in another hand. So you can see it is clearly legal. They give the money as tax, but they still collect it back in form of contracts from the government with interest. So the government received a large pool of money, but the problem was the fiscal management of that money. The government lacked financial literacy, so they could not equally maintain money and create wealth from it. The government ideal is to avoid having excess money. As a government official, if you fail to spend your allotted funds, you risk losing it in the next budget. You would certainly not be recognized for being efficient. But on the other hand, business people are rewarded for having excess money and are applauded for their efficiency. As this cycle of growing government spending continued, the demand for money increased, and the tax the rich idea was adjusted to include lower income levels down to the very poor people who voted it in. That's the poor and the middle class. So you can see how they initiated the idea, but the idea subsequently backfired on them because of the mismanagement of government that helped them at first sight to collect this money from the rich to give it to them in form of jobs and pensions. So true capitalists use their financial knowledge to simply find an escape. They headed back to the protection of a corporation. It was popular because the income tax rate of the corporation is less than the individual income tax rate. In addition, certain expenses could be paid by a corporation with pre-tax dollars. Let me explain this. I said the income tax rate of a corporation is less than the individual income tax rate. For instance, I am a worker now. I work with a company. When I receive 100,000 naira salary, the government may actually deduce or remove 30% of that 100,000 naira as tax. So on my offer letter or employment letter, they will indicate that the salary I will be receiving is 100,000. But the salary that will be entering my hand at the end of every month is just 70,000, because 30,000 will be deducted and given to the government as tax. But for the corporation, for the company, like I explained to you using that graphical that graphical representation, the corporation would, after gaining its own income, it will spend on its expenses first. Before then, the remaining balance would now be charged. I gave an example with having an income of, okay, let's say 5 million naira income, and the expenses of the corporation is 4 million naira. The corporation is entitled to use the 4 million naira before the remaining 1 million naira will be taxed. And to surprise you, that remaining 1 million naira will not be taxed as an individual tax, which is collected at 30% rate. That remaining 1 million naira will be taxed at probably maybe 3% or 10%. Okay, let's just use 10%. You'll be taxed at 10%. 10% of 1 million naira is what? It's just 100,000. So you find out that you are even paying more tax. You as the employee, you are even paying more tax than the company is paying. But you just see the tax statement of the company in millions, and then you feel, this company is paying a lot of money. But if you calculate it compared to what the company is getting, it is nothing. And then you are just a person who is suffering yourself, giving your intellectual asset to build another person's company. And then at the end of the day, you are still a loser. And let me tell you another thing. There are certain expenses that could be paid by a corporation with pre-tax dollars. I told you about a corporation gaining 5 million naira monthly, and then its expenses is 4 million naira. Part of the expenses is to maintain their company car, maintain their company jet, maintain their company accommodation, and the rest of them. And all these things are not taxed. If a company will buy a car, they will not tax the company. If a company will buy a house to keep its workers, they will not tax the company for buying that house. So if you are the owner of the company, you can just simply sit down under the company and enjoy these things. You'll be driving company car that is not taxed. You'll be living inside a company house that is not taxed. And most of your things will be run by the company. Your medical bills will be calculated under the company, and it will not be taxed. So that is how rich men live their lives. You see a rich man having a private jet, but the private jet is not in his name. The private jet is in the name of his company. That is why you hear at times some people saying the rich men don't have anything, but they control everything. So if you check, you find out that the property is not in their own name. It is in the name of their company. So this war between the haves and the have-nots has raged for hundreds of years. The battle is waged whenever and wherever laws are made, and it will go on forever. The problem is that the people who lose are the uninformed, the ones who get up every day and diligently go to work and pay taxes. If they only understood the way the rich play the game, they could play it too, because the rich don't have two heads more than them. Then they would be on their way to their own financial independence. This is why I cringe every time I hear a parent advise their children to go to school so that they can find a safe job, so that they can find a safe, secure job. An employee with a safe, secure job without financial aptitude has no escape, I can bet you. Get employment with NNPC, receive 2 million naira monthly salary. If you don't have that financial aptitude, you will still be trapped. So it is not the amount of money that determines your growth. It is your financial aptitude that determines your growth. So the harder you work, the more you pay the government. Remember, the harder you work, the more you pay the government, because as your salary is increasing, the rate of your tax is also increasing. The higher salary, the higher tax. If you are collecting 1 million naira before, they may collect tax of maybe, let's say, 300,000. If your salary increased to 2 million naira, it means your tax will also increase to 600,000. So can you see, the more harder you work, the more you pay the government. That is why the idea of take from the rich backfired on the very poor people who voted it. Every time people try to punish the rich don't simply comply, they react. They have the money, power, and intent to change things. They don't just sit there and voluntarily pay more taxes. Instead, they search for ways to minimize their tax burden. They hire smart attorneys and accountants. All those accountants and attorneys that graduated with first class, they feel, they are gurus. They come back to work for the rich people and persuade politicians to change laws or to create legal loopholes. They use their resources to effect change. So you can see, as an attorney who graduated with the first class, you feel, I am busted. That first class will still lead you to go and work for Dangote, who never went to university. That second class upper will still lead you to go and work for Bill Gates, who never went to university. That first class will lead you to go and work for Ellen Monks. Will lead you to go and work for other rich people who never considered, who never took degrees or certificates as their priorities. So all these intellectuals, accountants, architects, engineer, at the end of the day, you will just summarily sum up yourself under a rich person who never went to school, who never stressed himself 6 years in school to acquire a degree. So who is smarter? Is it you that went to school that you feel you are smart? You are not smart. It is a rich man that is smart. It is a rich man that is smart. That one that did not go to school is smarter than you that went to school, because you went to school so that you come and work for him. Whereas he earns more money than you would ever earn throughout your lifetime. So real estate is one investment vehicle that has a great tax advantage. As long as you keep trading up in value, you will not be taxed on the gains until you liquidate. People who don't take advantage of this legal tax savings are missing a great opportunity to build their asset columns. The poor and middle class don't have the same resources. They sit there and let the government needless enter their arm and allow the blood donation to begin. They will see things happening in the society, they will want change, but they cannot effect change. I mean, just last month on social media, it was shown that Obi Kubana was building a road throughout to his village. You can imagine Obi Kubana grew up seeing that road dilapidated. I know he has always been angry. The government refused to repair the road, blah, blah, blah. But had it been he sit down there to be complaining, he wouldn't have reached this stage that he would use his own personal finance to construct that road without the government being involved. He will see a lot of people who are unemployed and he will be angry about it. But had it been he sat there complaining that unemployment is the fault of the government, he wouldn't have been where he is today, that he can even help other people to build up their lives. So if you think deep inside your mind that you have the passion to help the less privileged in the society, then staying poor should never be an option for you. That is one of the driving forces for you to become wealthy so that you can have the capacity to effect change in the society. The first lesson of having money work for you, as opposed to you working for money, is all about power, because power resides in money and nothing more. If you work for money, you give the power to your employer. If money works for you, you keep the power and control it. So once you have this knowledge of the power of money working for you, be financially smart and not let anyone or anything push you around. If you are ignorant, it's easy to be bullied. If you know what you are talking about, you have a fighting chance. So it is because of your lack of financial aptitude that you just sit down under one employee, he will just mess you up, take advantage of you, abuse you sexually, assault you, curse your family members, disrespect you, and do any kind of thing that he wants to do to you. And because you are afraid, you want to play it safe, you don't want to lose that job, you just be doing lying down, doing that. Is somebody that on an ordinary day, he wouldn't have had the opportunity to do that to you, if not that you have subjected yourself under him, under voluntary slavery. Because he is not the person who caused you to become slave. You are the person who brought yourself to him. You sent in the application. He did not say you must come and work for him. You are the person who said you are looking for a job. You sent in your application to him. You told him that, sir, I want to come and be your slave. And so he can do anything he wants to do with you if he does not have God fearing in his mind. That is why he will take advantage of you, molest you sexually. He will take advantage of you by telling you to bring more money before he can give you employment. He will take advantage of you by disrespecting you, making your younger ones to even disrespect you. Because you have given him the power. So pay so much for smart tax attorneys and accountants. It is less expensive to pay them than to pay the government. It is too expensive not to know the law. If you know you are right, you will not be afraid of fighting back. That is why you need to have brilliant lawyers around you. If you are a lawyer, there is no need for you to stress yourself to become that brilliant lawyer. All you need to do is understand how to use money, and then you get brilliant lawyers that will work for you. It's as simple as that. In fact, get lawyers who are even more brilliant than you are. Work with people who are more brilliant than you are, because you will now combine their own brilliance in one place for your own benefit, and you will pay them well. Because if you don't pay them well, they will not work for you as expected. So it is less expensive to pay these professionals to work for you than to keep on paying tax to the government at the same time donating your blood. So each dollar in your asset column is a great employee working hard to make more employees and buy you luxuries. Financial intelligence or financial IQ is made up of knowledge from 4 broad areas of expertise. 4 broad areas of expertise. So this word, financial literacy, is made up of number 1, accounting, number 2, investing, number 3, marketing, and number 4, law. So henceforth, the learning and studying that you will be doing in order to improve your asset column or to build a solid base asset column will revolve around these 4 subjects: accounting, investing, marketing, and law. Make sure that you have little knowledge or understanding or deep understanding about these things. Like I told you, financial intelligence is a lifetime learning. You have to learn about accounting, learn about investing, learn about marketing, and then also have knowledge about the law, most especially when it has to do with tax. For accounting, accounting is financial literacy with the ability to read numbers. This is a vital skill if you want to build an empire. The more money you are responsible for, the more accuracy is required, or the house comes tumbling down. This is the left brain side or the details. So in your brain, the left side of your brain is what deals with numbers or accounting. The right side of your brain deals with creativity. That's where creativity comes into place. But then the left side deals with numbers. So you have to develop that your left side of the brain to be more frequent with accounting principles. Financial literacy is the ability to read and understand financial statements, which allows you to identify the strengths and weaknesses of any business. So for someone who has no knowledge of accounting, he would see a business opportunity, but he will not know that it is a business opportunity. But as for you that you are financially literate, you can easily see it and you can project how much income would come to you or how much interest will come back to you from that business. And that is the importance of accounting. For the second area, which is investing. Investing is a science of making money. This involves strategies and formulas which use the creative right brain side. And then the third one is marketing. Understanding markets is the science of supply and demand. You need to know the technical aspects of the market, which are emotion-driven, in addition to the fundamental or economic aspects of an investment. Does an investment make sense, or does it not make sense based on current market conditions? That is what you need to just simply understand. Once you have the concept of this supply and demand, you know, the higher people are demanding for something, it means the higher the price will be. So if more people want what you are selling or what the type of business you engage in, it means more money for you. So all you need to do is to understand, okay, in this particular environment, this is the kind of thing that majority of people are demanding for. Once you are able to provide a solution to what they are demanding for, it is money for you. It is just as simple as that. You can go to a local government, carry out inquiries. What is that common thing that a lot of people are complaining about? Once you find how to provide that solution, the solution to that thing, it is money for you because there is high demand for that particular thing within that environment, with that market. And then on the other hand, the higher the supply, the lower the money. So you can also be wise to stay away from goods or services that are already common, that we have a lot of suppliers. For instance, you will think, okay, I should start provision store. I'm not saying as little as it is, it's not good, but I'm just trying to give you an example of how goods or services can lose its value, monetary value, because of their high supply. There are a lot of people who have provision stores. So that is why items sold in provision stores cannot be that expensive. It cannot bring good returns to you. But as a beginner, you can start from that side before then you migrate into other bigger opportunities. But the concept I'm trying to explain here is that once the good or services is supplied by a lot of people, then it means the price will reduce and the interest or income you will get from that good or services would equally reduce. The fourth aspect of financial literacy is law. So a corporation wrapped around the technical skills of accounting, investing, and markets can contribute to explosive growth. A person who understands the tax advantages and protections provided by a corporation can get rich so much faster than someone who is an employee or a small business sole proprietor. It's like the difference between someone walking and someone flying. The difference is profound when it comes to long-term wealth. Of course, you cannot compare yourself who is walking with somebody who is flying, because the person who is flying will definitely move faster. It is just like transporting yourself in a car and another person transporting himself in an aeroplane, and both of you have the same destination. Of course, you know that the person who is using plane will reach to that destination before you. So that is the reason why you need to have knowledge of law. As a way of recap, I told you financial intelligence comprises of 4 broad areas: accounting, investing, marketing, and law. If you stay tuned with me, after we have gotten a good grasp of financial literacy, we will now come down to start discussing some of these course or subject areas one after the other: accounting, investing, marketing, and law. Those are the areas that we will develop ourselves in as we are building our own businesses. So there are certain tax advantages. A corporation can do many things that an employee cannot, like pay expenses before paying taxes. That is a whole area of expertise that is very exciting. Employees earn and get taxed, and they try to live on what is left. But on the other hand, a corporation earns, spends everything it can, and it is taxed on anything that is left. It's one of the biggest legal tax loopholes that the rich use. Remember, I said it is what? Legal, because it is allowed under the law. They are easy, corporations are easy to set up and are not expensive if you own investments that are producing good cash flow. For example, by owning your own corporation, your vacations can be board meetings in Hawaii, in England, in Beijing, in Dubai. Car payments, insurance, repairs, and health club memberships are company expenses. So all these things, the cars you are using, your insurance, the repairs for those cars, the health club memberships, and even the vacations or the abroad trips, they are all considered under the expenses of your company, and your company is not taxed for all these expenses. So most restaurant meals are partial expenses and on, but it's done legally with pre-tax dollars. So those are the tax advantages that you can get through using a corporation. Another advantage is in terms of protection from lawsuits. You know, we live in a litigious society. Everybody wants a piece of your action. Just like I gave you a story about how the Robin Hood theory evolved, the theory of collecting from the rich and giving to the poor, that brought the poor people into this problem that they are today. Up till now, once a person sees that another person is rich, he will want to now start looking for how to take the person to court in order to extract money from the person. So everybody wants a piece of your action. The rich hide much of their wealth using vehicles such as corporations and trusts to protect their assets from creditors. When someone sues a wealthy individual, they are often met with layers of legal protection and often find that the wealthy person actually owns nothing, as in nothing. They control everything but own nothing. The poor and middle class try to own everything and lose it to the government or to fellow citizens who like to sue the rich. They learn it from the Robin Hood story, take from the rich and give it to the poor. So you can see how clear this thing is. In terms of lawsuits, a rich man does not have car in his name. He does not have house in his name. He does not have insurance in his name. He does not go to all those foreign trips, those vacations, those enjoyment that he's doing abroad in form of board meetings. He is not doing it in his own name. All the properties he owns, is not in his own name. It is in the name of the company. So he bought those properties at first sight without him being taxed because he bought it in the name of the company. And when anybody wants to sue him and get money from him, they will discover that, if that transaction he had with the person was a personal transaction, they will discover that the rich man has no money. Because if you have a personal problem with the rich man, you cannot go after his company to collect money from the company in order to settle that problem. So it is only properties that are in the personal name of that rich man that can be liquidated in order to solve that personal problem. The rich man is an individual on his own. His own companies are individual or artificial persons on their own. So it's just simple. It's just like you and your brother. If your brother has problem with another person out there, nobody can come and arrest you and say you should bring your money in order to settle your brother's liability. It is you can only do that out of your own will or out of your own choice. If you feel like, I want to remove my brother from that problem, then I can pay the money so that my brother will be released. But the law will never force you to remove the money from your own pocket to settle your brother's liability. And that is simply what happens between you and your company. The law will not force your company to remove money from the company coffers or company accounts in order to settle your own personal liabilities with somebody out there. So once you don't have the money, nobody can go after you. So how smart can you see that? So in summary, business owners with corporations, they first of all earn, then they spend, and then they pay taxes. But for employees who work for corporations, they first of all earn, then pay taxes before they spend the remaining amount. Let me just simply show you the cash flow quadrant relative to taxes. If you are not watching your screen, kindly put your attention to your screen so that you can see what I am trying to explain here. The cash flow quadrant relative to taxes. You can see we have 4 spaces. On my left-hand side, the upper side of the left-hand side is that of employees. You can see 40%. Means employees pay 40% of their total earnings as tax. So if you are receiving, if your salary is 100,000, 40% of that 100,000 is 40,000. So the government will collect 40,000 For the work that you use your own sweat and blood to do, government will collect 40,000 and it is only 60,000 that will come into your hand. On the downside is self-employed. Okay, let's say you're not an employee, you have your own business, but you go out every morning to go and sit down as the boss. Although you have other people who are working for you, but you always go out, you have your own office within that your business premises. It means you are self-employed. Or even if you don't have employees under you, you are the person who is managing it directly by yourself. You are self-employed. You are the person who even pay more tax. Because as a self-employed person, 60% tax is generated and given to the government. There is no much time for me to start breaking these things to you, but subsequently you will get to understand how this makes up 60%. It all starts from the services you are rendering, from the goods you are buying to sell. Taxes are always around them. In fact, almost everything you do in this society, taxes are always around you like demons. When you buy clothes, you remove, let's say you remove 2,000 naira to go and buy a trouser in the market. The initial price of that trouser when the producer produced it, perhaps might have been 1,800 naira. But before it reaches the market, government would have collected tax on that trouser, tax of what? 200 naira. And because the producer will not want to be the one to pay for that tax, it is the consumer that will pay for the tax. So what the producer will do is that instead of selling that trouser for 1,800 naira, he would now fix the price for 2,000 naira. And you would not know. You would think as if you just bought a trouser, nothing, there is no tax. But that trouser you bought, government have already collected 200 naira. And it is you who paid that 200 naira, not the producer. It is not the rich man who paid that 200 naira. It is you who bought it. You, the consumer, you pay tax without knowing because government have already deducted the tax even before you bought the property. On the right-hand side, which is the side that I would advise you people to follow. On the upper right-hand side, we have big business. Their own tax is just like 20%. Big business are businesses that have like 500 plus employees. Their own tax is just 20%. And then the downside of that right side is investors. Investors at times pay even 0% tax, as in 0%. Because you find out that government would come out making public announcement, inviting investors, come and invest in Nigeria, come and invest in my state. You see our governors traveling to China, traveling to Germany, traveling to England, looking for investors that will come and invest in our countries. If you're an investor, you make an investment, the government will not collect from you as tax because they are the ones begging you to come and create jobs. They are the ones begging you to come and help improve their economy. So they will not want to scare you. They will say, no, we don't even want you to pay any tax. All you need to do is to just bring your money and invest. So you can see an investor goes with 0% tax. As for me, personally, I want to revolve around these two sides of the quadrant: big business and investors. Big business and investors. This is how rich people minimize their tax burden. It is not as if they come out illegally to say we are not going to pay tax, or we are going to use our money not to pay tax. When tax officials come, we would fight with them. No, that's not what they do. They just play the game smart. So if at the moment you are under the side of an employee or self-employed, as an employee, you can start your evolution gradually. As an employee, you can be preparing towards becoming self-employed. From self-employed, then you can expand and remove yourself from that business sitting down in the office every day as your job. Get other people to manage and run the business for you while you keep on expanding it, expanding it, expanding it. As you are expanding it, it becomes a big business. And you can have more money to engage in other investment opportunities as an investor. So if you are already self-employed and not an employee, also be preparing towards moving up to big business and investors level. So this is the cash flow quadrant relative to taxes of an employee, person who is self-employed, or person who is in big business, and an investor. It is left for you to make the choice. You can decide to stay as an employee. You can decide to stay as a self-employed person. You can decide to start looking forward to big business. You can decide to start looking forward to becoming an investor. The choice is yours. All I can do is to make the whole thing plain for you. These are the disadvantages and these are the advantages. The choice is yours. So that is all we have to learn about the history of taxes and corporations, which is one of the biggest secrets of the rich. They do it legally, not in an illegal way. They don't fight with anybody to achieve their aims. All they do is to play it smart. They don't have two heads compared to you. If they can do it, you can also do it. And if you even check critically, most influential people or business people you know in the society today are people who started from nothing, people who started from zero naira, people who came from poor backgrounds. But because of their financial aptitudes, they were able to build the wealth that they have today. So thank you for your time. See you next week on the continuation of our training on financial literacy. As of next week, we are going into lesson 5. So see you next week. Thank you. Enjoy the rest of the week.